Hello guys, welcome back to another video. Today we're going to be discussing how call options work and how we can use them. Alright, let's get into it. So what is a option? Let's just look at the basics. So what an option is it's a contract that gives you the right to buy 100 shares at the given strike price. So let me just go over that into a little bit more detail. So it gives you the right, which means you have the ability to buy 100 shares at the given strike price, but you're not obligated to. When I buy a contract, I'm not obligated to buy those 100 shares. I just have the option, which is where it gets its name. I have the option to buy 100 shares at the given strike price. So now that we're over that, let's get into this a little bit more. So one options contract allows you to buy 100 shares at the given strike price. So basically, if I buy this contract for $35, I will control 100 shares with that $35 that I paid. And that amount that I paid, that is called the premium. So you may sometimes watch some people and be like, hey, this premium's whack, or it's too high, or it's, this premium's looking low, it's looking, and all that kind of stuff. So whenever they refer to premium, they're talking about the amount that you have to pay for that contract. Who's selling you the contract? Where are these shares coming from? Who's gonna be like, hey, I'll give you the right to buy 100 shares at $20 a share? Who's that person? Usually it's a market maker, but it can also be another individual like myself or some other random schmuck on the street. They could just be like, they could own 100 shares of the stock and like, hey, I want to earn some $35 this week, or in 2 weeks I want to earn like $35. They can sell this call for $30 or $35, and then their shares will be locked up in that contract, and whoever the buyer of that contract has the right to buy those shares at $20 a share. So they're basically going to take away his shares and pay him money for those shares, right? That's usually how it works, because if I'm going to execute this contract, I need to have the money to buy those 100 shares at $20 a share. So I need about $2,000 plus the premium I paid for the contract, which would be $2,035 in total if I wanted to execute this contract. But most of the times you don't see people executing contracts. You see them really just flipping them like houses or like cars or whatever. You buy it, the stock price moves up, your contract goes up in value, you sell the contract before it even expires. That's usually how most people do it. But there are some people who hedge their stocks, or they want to make passive incomes like Theta Gang or whatever. They sell their shares, they buy 100 shares, and they just wheel it, which is a strategy. I can get into that into another video, but some people do that just for a little bit of that passive income. But yeah, in my opinion, the best way to do it is just to buy it. If it goes up, sell it. If it doesn't go up, then just hold it until it expires, and that's it. Whenever I buy options, I'm expecting all the money that I put into it to be basically gone forever. So I don't put money into it that I'm not comfortable losing. So I recommend you guys to do the same, because I don't want to hear like anybody like, oh, I put in my life savings, I left everything, that's kind of weird. So don't do that. Stay safe. Buy equities. This is purely speculation. Options, if you didn't know, are derivatives. They derive their value from the underlying stock price. In this case, it's Tattooed Chef, but it could be with any stocks. I could come over here, pull up Airbnb, and they have an options chain as well, and these options all derive their value from the actual stock. So these are not safe bets. These are not like something you want to own for like a long-term investment. I'd rather have you buy the shares, because these are very speculative things. These are very speculative assets, and you don't want to put in your life savings into something like this and then it goes down, or it doesn't perform the way you think it would, and you just lose all that money. Also, another thing to keep in mind is options do have an expiration date. They're gonna last forever. They're gonna expire at a coming day. So you also have to keep that in mind. So again, if you're investing your money, put it into the stock instead, because you're gonna be owning something and it's not gonna expire. You have all that time. Like, stocks can do anything in the short term, right? It can go down in the short term, and you can lose a bunch of money if you have all your money in options, versus if you just had the stock price. Hey, if you just had stock, and if you just have shares in that stock, like let's say if I have shares in Airbnb, I don't care if the stock price goes down tomorrow. I'm just gonna hold it, let it ride through. I don't have any worries. But if I'm holding I don't know, options, man, I'm gonna be shitting my pants, man. I can't be holding all that stuff, man. You know, my money's gonna go down, the premium's gonna get killed. I'm done. I'm out a bunch of money. So that's why you don't want to be putting money that you can't lose into options, because they're very risky and you need to be cautious when you approach these. And you also need to be very well educated before you even touch these puppies, because man, they'll set your ass on fire. I'll be playing straight. You know what I'm saying? You know what I mean? So you want to be careful when you get into the options. You know, think about it as a coupon that allows you to buy shares at a certain price, and that's about it. It's just, you know, it's fun to play with. I mean, it's mostly gambling, but you know, we like to take some risks some here and then. You know what I'm saying? So like, you know, we take some risks every now and then. But just be careful whenever you get into the mix with these puppies, you know, and treat them with caution, because don't put a lot of money in them, because they could go down very fast and they could also go up very fast. So they're very volatile assets, and just stay careful with them if you're going to get into them, and just exercise caution. Don't put an amount that you're not comfortable losing into options, because you know it can go south very fast with options. All right, guys, thank you for tuning in, and have a great day. God bless you, and I hope you're blessed for the rest of this year, for the rest of your life, baby. You know what I'm saying, bro? So keep a good attitude, and let's get into this, baby. Let's go.